Hi, this is Stuart Weems and welcome to the Investopoly podcast. My goal is to give you simple, easy to understand strategies, insights and tips to help you master the game of investing. And in this episode, I'd like to talk about, or at least present, an investment case for investing in property in Brisbane. Now, I recall I hosted a seminar back in August 2018 in a very pre-COVID world where we could invite clients into the office and deliver a presentation to them. The good old days, let's call them. And anyway, I presented a few value investing opportunities I thought presented at the time, and I suggested that Brisbane houses that were worth in the range or selling in the range for $800 to $1 million represented, a pretty good investment at that time, and I presented the reasons why, and there was a few reasons why, including interstate migration and overseas migration picking up. Now, if we recommended a whole bunch of our clients buy property in Brisbane at the time, and really did so through since 2008, over the last 3 or 4 years. So if you had purchased a house for $800,000 in 2018, it would be worth. I think it's going to deliver, for the reasons which I'll outline in this podcast, deliver really good long-term returns, but certainly in the shorter term, the returns have been very attractive to say the least. And I think depending on your financial situation, your existing assets that you've got, what your investment strategy looks like, in adding an investment grade property in Brisbane into your portfolio might be an excellent addition. And I want to set out some of the pros and cons. So it's not all just about what the positives are. There are some downsides when comparing to other investment grade locations like Sydney and Melbourne. Brisbane doesn't tick all the boxes. So let's look at, the pros and cons. I think the pros outweigh the cons, of course, but let's look at both the positives and negatives. So let's dive into it. The first positive, I think, could be overseas and interstate migration. And I've got a few charts which you'll see the links in the show notes and obviously on the blog on the website. And I've charted both interstate migration and overseas migration. Now, interstate migration was negative in Queensland for a period of time, going back, probably going back more than 10 years now, which is kind of unique because certainly in the 80s, 90s, and even slightly into the early 2000s, it was strongly positive. That is, most people were moving to Queensland, from Victoria to New South Wales or Melbourne and Sydney up to Queensland. But that trend reversed for a period of time, and it certainly bounced back over the last 3 or 4 years, where interstate migration has always been negative in New South Wales, so people leaving Sydney. And as a Melbournian, it's incredibly tempting for me to throw some stones at them, but I think given their current lockdown situation, that's probably a bit cruel. But Melbourne's always been better than Sydney, so we probably don't need to mention it. In any case, it's always been negative in New South Wales, and at a time there were more people moving to Victoria than any other place. But that's changed as well, and thanks to COVID, that's probably not going to reverse anytime soon. But certainly interstate migration from New South Wales and Victoria to Queensland is substantially positive. And I suspect that COVID will probably boost that a little bit. But the thing to note is that most interstate migration goes to the Gold Coast and Sunshine Coast. So it's probably people retiring or looking for a bit of a sea change rather than moving from Melbourne to Brisbane. Again, that might change as well with work from home, people being able to work remotely. And again, maybe COVID's going to change those things. People that have lived through really harsh lockdowns in Melbourne and particularly Melbourne and also Sydney, might start to think the grass is greener on the other side and relocate to Brisbane, particularly if their employment opportunities don't really change. Interstate migration historically hasn't really had a big impact on the Brisbane property market. but might do moving forward as a result of COVID. Overseas migration, however, mostly goes to Brisbane, and Brisbane gets the lion's share of that, of course. And it was, in the early 2000s, overseas migration was significant contributor to the property market, and it's trended down though since 2008. And a large proponent of the overseas immigration are people moving from New Zealand, actually, on subclass 444 visas, and represent about half of the overseas immigration. So it's going to be kind of interesting to see what do New Zealanders do. Will they have an appetite, if they're going to immigrate out of New Zealand, will they have an appetite to go further afield? Or maybe because of COVID and the events, maybe they're more likely to stay in the region, and Brisbane could be a good opportunity. And I'll talk about why. I mean, house prices far more palatable in Brisbane than they are in Melbourne and Sydney, particularly if you're moving from New Zealand, where you're probably moving from a lower price base. Interestingly, in 2008, for example, about 16,000 New Zealanders moved to Queensland, and again, most of that went to Brisbane. Whereas between 2017 and 2019, it sort of ranged between 1,500 and 3,000. So substantial difference there. But if that bounces back, generally, if overseas migration bounces back, which I think it will, and particularly if New Zealanders, that New Zealander cohort bounce back, it could have a significant contributor in terms of permanent migration through to Brisbane, and that could have a significant contributor to the demand-supply balances there. And I think, Australia, certainly is attracting a bit of criticism in terms of its approach to COVID and lockdowns and and low vaccination rates, all those sorts of things. But, in 1 or 2 years' time, that's going to be really old news. And really what people will look back at is how did Australia fare through the pandemic? And I think the assessment will be well. And as such, I think it's going to be a more attractive immigration destination than it was in the past. So I think Australia is really going to be able to control. Well, the demand is always going to exceed the availability of immigration positions, I think, which puts the country in a good position where they can dial it up or down. So I guess I would add overseas migration and interstate migration as a unknown rather than a pro or con, but certainly I think the balance is leaning towards more upside than downside. Certainly a positive, a pro, is the amount of infrastructure spending that's going on in and around the Brisbane area. There's about $20 billion of projects at the moment, and most of these projects, I mean, there's some rail there, but a lot of them are really aimed at entertainment and improving the livability. So there's the Cross River Rail, there's Queen's Wharf Precinct, Showgrounds Master Plan, Brisbane Live, which is like an entertainment precinct, and those sorts of things. $20 billion is pretty significant. And the Queensland government just completed last year its second runway at Brisbane Airport at a cost of $1.4 billion, and they project it's going to generate about $5 billion of economic activity over the next 10 years. And of course, we're all well aware that Brisbane will be the host of the 2032 Olympic Games, and KPMG's projected that will deliver about $4.6 billion of economic benefit. It's not going to cost $4.6 billion. So, all these infrastructure projects and so forth will improve the livability of Brisbane. It means it has a lot more to offer its residents, and will make it a more desirable location. Now, one of the negatives with Brisbane is its population. Obviously, it's about half the size, has a half the number of people that are in Melbourne and Sydney. And really, population is a big contributor to the supply-demand equation, because really what we want to do is there's only less than 5% of properties are investment grade. Most properties aren't worth investing in, so it's really about picking the best properties. But mostly it's about making sure that we're investing in blue chip locations that have or will benefit from a substantial cohort of people that are in a financial position to always pay more for property. So it's a desirable location. You really need a strong cohort of people that have the means to pay more. And this is really linked to overall wealth position rather than just necessarily income levels. And so the greater the city, the more chance, the larger the city, the more chance there is that that's going to occur. Now, Brisbane's not a small city. It's got about 2.3 million people in it. But, compared to Sydney at 5.3 or Melbourne at 5.1, it is substantially smaller. So from a risk perspective and from a growth perspective, Melbourne and Sydney are probably better placed. But it's just something to consider in terms of a downside. Interestingly, though, when you look at ABS projections, what population might be by 2060, certainly it's interesting to note that Brisbane does or is projected to benefit from a higher population growth rate. A positive is better affordability, and I think not only for investors, but kind of across the board. And I think this really plays out in immigration, both interstate and overseas. But really, to buy a investment grade house in Melbourne, you really need north of, or at least close to $1.5 million to really get a good quality asset. To get something commensurate in that you could otherwise buy in Brisbane, you're probably going to need north of 1.5. And in Sydney, north of 1.7, 1.8, 1.9. In fact, let's draw a circle around 1.7 to $2 million. Whereas in Brisbane, you can spend somewhere in the order of 1 to 1.5 and get yourself a really sensational quality investment grade property on at least 400 square metres of land. Whereas in Melbourne and Sydney, you're getting half the land size. So you're really getting a lot for your money. And I think that's going to be a big attraction, again, to New Zealanders if they're looking to immigrate. The housing affordability is much better in Brisbane than it is in Melbourne and Sydney. One of the downsides to Brisbane is job opportunities, particularly at the higher level, at a kind of executive level. I looked at a list of 165 notable large Australian businesses. Many of them were listed. Only 27 out of the 265 had head offices in Brisbane, 94 in Sydney and 84 in Melbourne. So, we know the lion's share of head offices are in Melbourne and Sydney. And that's where the good jobs are, the really high-paying kind of executive role jobs. Now, of course, the work-from-home movement could go some way to kind of alleviating this. It's quite possible now that maybe you could be a CFO of a listed company that has a head office in Sydney and you work out of Brisbane. And I think for some occupational roles and some industries, that's going to work well. And so that could alleviate some of the problems. But the reality is that the main sort of supply of those sorts of high-level, high-income paying jobs are mostly in Melbourne and Sydney, and that's a downside for Brisbane. A positive is you're probably going to pay lower stamp duty, certainly lower stamp duty than compared to Victoria, but ultimately because the purchase price is lower, less stamp duty than if you purchased in Sydney. So if you purchase $1 million property in Queensland, you will pay about $41,000 in stamp duty. In Victoria, about $56,000, and in New South Wales, about $41,000 also. So not much difference between New South Wales and Queensland. But of course, you're not going to be able to buy an investment grade property for $1 million in either Melbourne or Sydney. So you're ultimately going to end up paying a lot more stamp duty. So not only the affordability, the actual cost of the property is going to be lower, but obviously then the on costs, the stamp duties and so forth. And even land taxes are going to be lower, so that's a positive. Another positive is a higher rental yield. So houses generate more rent in Brisbane. I think that probably speaks to some degree that perhaps they're intrinsically undervalued compared to other states. So houses, you are typically going to receive somewhere between 2.5% and 3.5%. in terms of rental yield, depending on location and type of property and so forth, of course. And the midpoint being 3% is what you typically receive. That's what I would do my numbers on. But you're not going to get 3% rental yield in either Melbourne and or Sydney. In fact, you're lucky to get 2% in those locations. So really, you're going to get 50% more income from your investment. And again, I keep harping on, but the entry costs, the purchase price is a lot lower as well. So really, on current fixed mortgage rates, a property after tax in Brisbane is probably going to cost you less than $10,000 in terms of holding costs, which in the scheme of things, it's not a small amount of money, but comparatively, what property has cost in the past, that's pretty cheap. And then when I think about, the prospects, the growth prospects in Brisbane, I tend to try and think long term. And what I really do is sort of ask myself the question, on the basis that I can buy an investment grade property in a blue chip suburb, such as Toowong or Ashgrove or Paddington, it's going to cost me between $1 and say $1.5 million. It's going to be on maybe 400, 500 square metres of land, which means the overall land value of the property is going to be about 60-70% of its overall value. So you've got a strong land value component, a good parcel of land, a 3% rental yield. You get a lot for your money. So then what I do is I ask myself, well, in 20 years, what will this property be worth? It's not inconceivable that, if I buy a $1.5 million property today, that in 20 years it's going to be worth well over $4 million. I mean, that's sort of $2.5 million of equity in a property over that time. And that's only a growth rate of 5%. I mean, I would be disappointed if it achieved that. So I can make this investment, probably make $2.5 million of equity over the next 20 years, and the holding costs are going to be low. I mean, the property in 20 years' time will be positive cash flow, of course, but certainly the holding costs over the first 10 years tend to be the most considerable. And if we're going to have lower interest rates for a little bit longer period of time, certainly 5-year interest rates are pretty low anyway, fixed rates that is, the holding costs are really low. So to wrap up, Brisbane property I think does have a lot of merit. That is not to say at all that it is much better. It's a much better investment than Melbourne and Sydney. I think, of course, they have merit, and some of the cons in terms of that Brisbane have in terms of population size and employment opportunities are very, very important, and their attributes that Melbourne and Sydney have over Brisbane. So I'm not saying that Melbourne and Sydney aren't good investments. I guess what I'm trying to make a case for is if you already have investments in those markets, then it might make sense to have some geographical diversification. And as such, I think Brisbane presents a pretty good investment case for achieving that geographical diversification for all the reasons that I've just highlighted. And of course, it would be remiss of me not to point out that it is obviously paramount to buy the right assets, and not just any property in Brisbane, of course. Asset selection is still absolutely key. It has to be an investment grade property in an investment grade location. Okay, that's it for me for this week. I hope that's been useful. Of course, there's more information on the blog on the website. Until next week, bye for now.